Hey, everybody, welcome back. A happy Friday to all of you. It's been an interesting week and a really positive week in terms of upward moves towards the end of the day today with some of the Fed announcements. We're certainly going to go through those and look specifically at what comments were made, what sectors performed, and what sectors do tend to perform better under more dovish kind of conditions from the Fed and an expectation of an interest rate cut, which, by the way, for September jumped up to 90% today. So again, good to be with you. Mike Fairborn here for Market Movers, filling in for Ben Watson. Plenty to discuss today. I'm joined in the chat by the go-to guy for all my classes. That is Cam May. See him in the chat. Appreciate Cam being here. I just got through doing chat for him. So he and I kind of do the buddy on the chat quite a bit. Appreciate Cam being here. Great to have all of you here. Scott, Andrew, Greg, Jay Richardson. We've got Will, Life in the Fast Lane, Joe. Hello to you, Riceberg and Kelly, as well as Jose. How's it going, Jose and all? Folks, I want to dive into this really quick because we are on a shortened time frame here, about 25, 30 minutes left for our class already. So want to dive into it. Let's start off with some disclosure items to get going here. Information here is for general information purposes only. As it does state here, the paper money software application is for education purposes only. Past performance is no guarantee of future results. Schwab does not recommend the use of technical analysis as a sole means of investment research. Not as a sole means. Investing involves risks, including the loss of principal. And that's what we've got there. There's a note here, guarantee that the execution of a stop order will be at or near the stop price. Okay. Well, having said that, let's go ahead and take a look at our S&P 500 index. And that is a candle that we have not seen in just a little while. That is a candle that is really quite bullish. And one of the things that a lot of technicians will do, this kind of gives them a sense of what we could expect in the markets going forward, is the size of the candle. The size of the candle is fairly big. What is the range of the bar today? Well, the market's not closed yet, but the range right now, as you can see, is 94. It's basically a 100-point move today from the low to the high on the range. If you're measuring the exact low to where we're at right now, the high or the low to the high currently. And the bigger the range, sometimes that can mean, well, there's an overwhelming level of interest, upside or downside. Let's just do this really quickly, just as an observation here. Notice a little flag pattern we have right here. We have a pretty big bar right there, a bar that we hadn't had in quite some time. Now this bar, this bar right here, in fact, I'm just going to zoom in. No sense all of us squinting here at my charts. Let's do this even more. So just these little flag patterns here. Look at this. I mean, that right there is a giant bar. Now, we can say what happened after because it's all in hindsight, but there was a move up. You're getting another giant bar here. There's a follow through. You got a little bit right here, but that is on par with some of these other large bars that have come after a little bit of a flag pattern. We don't know if it's going to go higher in the future. Specifically, August tends to be a sideways channel. September tends to be down a little bit, but I wanted to park that in the back of your minds. Before we're going into the Fed cut, let's just say what was the best performer on the day, which was the Russell. Now, the small caps really perform, and a lot of times they're more rate sensitive. If you can lower the interest rates on a small cap, it can be even more impactful to those companies if there is the potential for lower rates. And we just discussed earlier, the Fed kind of came off with a more dovish tone clearly today than they had previously been. All right, if we come over here and look at that, that's a big bar. And this has really been a massive lagger, comparatively speaking. Here's your weekly here. Okay, you'll notice something about the weekly on here relative to. Let's make it relative. And we can do that with a comparison. We'll click on comparison here with the S&P 500. Remember, the S&P 500 had made highs. The Russell all this year has been really kind of in the troughs. Right now, it sort of looks now like a V bottom, but it's happening a little bit after the fact. So it's been kind of a laggard, but it's been showing some force coming out of there. The reason why I bring that up is there can be some values associated with some of the small caps that the larger caps don't have because they have run higher already. So value components can exist clearly in an environment that has been underwater a little bit, but that was really kind of the performer today. In fact, I'll just pull this guy up over here and we'll just raise this guy up real quick. And I'm just going to highlight some of these key areas here. I mean, if you look at, well, there is the Russell. Okay, so up about 3.8%. What was the SPX? SPX was up about not 3.8%, but about 1.5. So a significant increase there. Okay. As we take a look at the Russell, and by the way, before we do that, I wanted to, because I highlighted this for you guys today, because I knew this was going to be kind of on the agenda. Let's see how the week finished off, specifically how it may have been impacted by some of the breaking news. I just want to summarize those news comments for you. I'm right off my X handle here. And by the way, you can join Cam and I on X. Cam has pinned that to the top of the page. Cameron May CS. You've got to spell it Cameron May CS to get to his Twitter. Mine is Mike Fairborn CS. Same way. You got to spell it the right way, folks. I'll just go ahead and post this into the chat if you want to see the summary I've made for you guys today. Of those of you that haven't, by the way, give us a follow on X if you'd like. We do post a lot of financial content on there as well. These were, I just have four of the key points that Powell made today, pointing to a more dovish condition. This is, remember, at the Jackson Hole Symposium that he's discussing. Shifting balance of risks may warrant adjusting policy. Now, the risks were towards inflation previously, what he'd been discussing about. Inflation, those were the prior risks. Okay, keep that in mind as we continue through here. That's what those risks were previously. It says the effects of tariffs on consumer prices are now clearly visible. So they're getting more insight into inflation. Specifically, it says here, reasonable base case is that inflation effects of tariffs will be short-lived. Now think about this, the shifting of the balance of the risks. It was towards inflation. That shift has been dropped, and it says right here, balance of risk appear to be shifting. What is the risk right now? The risk is in some of the labor market details. I posted a couple of posts yesterday about the labor market. There was an increase of about 11,000 more unemployed than expected in the labor market. So those are the risks. And when that's the case, the Fed oftentimes will take a more dovish position. Reduction in potential inflation, increase in I should say risks. So this is the risk of labor, and that means potentially job cuts. In fact, the term was, and I wrote it down here just so you guys would have it, risks to the lower bounds of interest rates and due to downside risks of employment rising. So Powell said situation suggests downside risk to employment rising. So in other words, unemployment could be an issue. So just keep that in mind. Let's just go ahead and that's when they oftentimes will cut. I did post a heat map in here, folks. It was all green, including the Mag 7 technology. We'll look at some of the sectors that were really performing on the day, though, momentarily. This was interesting as well. The rate cut probabilities are now they were above 90%, at least when I clicked on it earlier. Sometimes these change during the day, but that is for a 25 basis point rate cut. 93% is where it was when I sent out that X post. I did post the Russell 2000. These were some of the leaders on the day. Top 10 out of the 2,000 out there. Some of these are huge. I did make sure that these companies were all above. Every one of them was above $5 a share, the stock price, because obviously that's going to influence. I mean, there were a couple out there that were over 100. There was one over 100 for sure out there that I saw. But like this, I put these industries in just so you could kind of see, because some of these might have PE ratios, right? Because this has been a lagging group that are lower, and that could be a positive thing relative to other companies, let's say in the NASDAQ 100. But it is, these have really been moving. And you recognize any of these? I really don't. Well, a couple. But those were the big movers on the day. Okay, and the last news update here was from Canada. Remember, Canada was really kind of the holdout on some of those retaliatory tariffs they had on the U.S. That removed the 25% retaliatory tariffs on the U.S., which represents about $21 billion worth of U.S. consumer goods. So that would be a benefit to the U.S. of about $21 billion that we've been paying otherwise for tariffs into Canada. Those are the products right there. Peanut butter beer, you get it. Some of the staples, folks: peanut butter beer and motorcycles. We've also got the tariffs were on U.S. steel that are still there, aluminum, automobiles. They're pretty competitive in that group, but hopefully that gives you a summary of the Powell announcement. And yeah, you can get that right off that X post if you would like to check any of those out, some of those stocks. Okay, well, with that, let's move on back to our charts here. I'm going to go right into, well, let's do this first. Market Watch. We'll get off the heat maps, and what I want to go into is actually not the Dow, although we did see some movers in the Dow. It'd be fun to look at the Dow as well, but sectors specifically. How do we do in those sectors today? I'm just looking at today alone. What was really performing? Now, when I go through this, you want to be thinking, what sectors do tend to perform maybe best in an interest rate reduction environment, when they're potentially cutting interest rates, if in fact that's the environment we find ourselves in, which is what some of the data is suggesting. There's probabilities of rate cuts from the CME Fed watch list as well, stuff like that. So you've got the discretionaries, consumer discretionaries, really the big winner, the only one really in 3% range. Energy did good. Communication services, here's another big one. Materials can do well. Construction projects could be more costly, but if you reduce interest rates, that can be more, it can be more inducive to growth, fewer costs, right? And by the way, the energy group, I mean, a lot of these can come into play. I mean, some of these, are very heavily capitalized, and if rates are going to go lower, that would be, kind of interesting to see. There is this real quick. I'm just going to show you on interest rates right now. So you have it. You've got to put this symbol in. It's kind of funny. It changes. TNX colon CGI. This is the impact of interest rates today on that 10-year note. What I did want to do, though, is highlight, because I think the shorter notes were actually dipped a little bit more. Let's take this down so you can actually see the impact of this on a shorter term time frame. I'm just going to go, let's say, for example, a 30-day, 30-minute. Ooh, that doesn't look good with the that after hours. Or there we go. So that's the dip you had today. Let's go shorter term. This is the 10-year. I'm going to go to a shorter term. This is IRX colon CGI. There you go. And you can see that that's dipped down. So that's at 40. Or you just move the decimal over one. So that's about a 4%. But you can see that is the 13-week interest rate bill, and it's been down, yeah, so pretty substantial, as you can see, from really well, about a few weeks ago. It's been down quite a bit, but we're seeing a lot in that group. Okay, well, while we're at it, let's look at some of the consumer discretionary as it stands, specifically in the S&P 500. So I want to just pull up the S&P. So let's look at some of the bigger cap stocks here. Discretionary specifically. I'm in the Scan Tab Stock Hacker. It's a sub tab. Scan in S&P 500. It's a very interesting day to check this out. Discretionaries. What was really kind of the winner here? Or let's say the top 10 winners. This would have been a good X post as well. Ooh, we don't even have today's change. And that's what we're after. It's got the 1 month in there. But we want to just see percentage change to make that comparable. I'm going to put it right after the industry so we get that read on it as well. And we'll highlight this. There you go. So Norwegian Cruise Line. So you got the cruise lines, home furnishings. We saw some of the, there's Carnival. Now, Carnival was one that we'd looked at in my Tuesday class for swing trading. This is one that came up on a kind of a flag pattern. It would appear that it might have started to move outside of that flag. I want to take a look at that today. Oh, Tesla's in there too. And Wynn was another one we looked at. And there's Wynn right there, up about $5. And so these were some of the flag patterns. Let's pull those up right now. We discussed those in that class. Here is CCL for you guys right there. Do you see the flag pattern? There's the follow through right there on Carnival. Wynn was another one. Flag pattern. We talked about the size of those moves. That is a fairly big size move right there. And sometimes when you get those big moves, getting it started out of the base, sometimes it will continue. A lot of people don't like it because they say, doggone it, I really would have loved to have bought down here. We're already up 2%, or excuse me, $2 here at about 7%. But the question is does it have more room to run? I'm going to show you guys right now. We're going to put a paper trade on this right now. If that's a flag pattern, right? And this is the potential follow through. That's our T2 target that we talk about in our swing trade class. That is T2 right there, target 2. It's already above target 1, which was the prior high. Hit that today alone, just with this bar alone. But you say to yourself, it's at around 31. The target on a swing trade, if there is a follow through, I mean, is substantially higher. I'm going to put a trade on here, and then we'll monitor this trade actually in that swing trade class come Tuesday. Okay, I'm going to put this the stop, and we did talk about those stops. They're not guaranteed an exit at that stop price, but we'll put it below today's low at about 29.30-ish, and we'll put the target. Let's do a full measurement though of that right now, since we are putting a trade on in this market movers class, really maybe from next week. And I realize we are getting it towards the high, but like I said, one of the benefits of a swing trade is you can tie in some of these price patterns, and it can give you targets. That's one of the things that's always attracted me to price patterns, is the potential for a target right there. So there's your range. We're measuring that range off of the bottom here. Our target would be, yeah, we eyeballed it pretty close, about 36.40. I'll go ahead and put it at 36 though, okay? So the trade would look something like this. I'm going to right click on the ask price. I'm going to go to buy custom OCO bracket order. Boy, I've got all kinds of stuff in here. There it is. Perfect. Now down below, we're going to put it as a day order. I'm going to go ahead and just go market order. So we get a fill. I'm going to go GTC, or good till cancel, so that those OCO brackets don't fall off, after we're in the trade, for example. Let's put our target to the upside in. It was a little bit above 36 according to that flag pattern projection that we just put on. But we're going to go ahead and set this one up at that 29.30 range. And that gives us sort of a risk and reward. We don't know, we don't have the exact prices because they're both triggered, right, at those levels, and they compete as a market order. Generally, right, is what we're talking about here. So you look at 36 and you say, before I put this in, I think it's always good to take a look at this, which is another real benefit of a swing trade that you think you've got in your, maybe working in your favor. If that would be the expectation, is this up here could be the, oh, I went too high. I got a little exuberant myself. All right, right there is your potential reward, right? Potential reward. And down here, if you're buying in here, I'll just put it in, well, got a lot of red, but I'll put it in red anyways, right down through here. That could be your potential, just short risk. I'll just put it RISK. And I might as well just spell this out so we're all on the same page. Reward. Okay. So reward maybe in this range, risk in this range. You're probably looking at a 2+. I'm just eyeballing it here, but a 2+ reward versus risk. A lot of traders will like to see that. They want to get at least a 2-to-1. I think it's a little bit more than 2. I can't say for sure, but it looks, well, I think it is, but maybe it's even a 3. You'd have to look at the actual numbers, a 3-to-1. But the higher that number there, a lot of times traders will like those ratios better. Let's go ahead and put the trade in right now. I did want to take a look at the dialog box here so we can just take a quick peek. It's always a great idea to do that. I'm just doing 100 shares here, but you can see you've got 100 shares here on CCL. You've got to buy at the market, and then you've got your target on the upside as a limit. You got the stop down there, which is below today's low. Let's send that on through right now, and it should fill pretty quick, and it did. Okay, so we've got that one under our belt. Oh, sorry, I'll just take a look and see if we've got any comments or anything. I think we're probably doing pretty good there. Okay. If you guys are getting value out of this class, I do have a similar class. It's a Wednesday class, Markets and Sectors, where we do look at this kind of same sort of information, a little bit more in depth into sectors, but I do like the components of placing trades here. But if you are getting value, smash that like button. Gives us an idea that you are finding value in these discussions here. Let's see. I think Cam's got us covered here. And okay. Oh, let's see. Was there a script in there? Wiley, I'd be happy to share that. It didn't catch my attention. Let me pull that up and see if, oh, right there, MACD crossover. Okay, I'm going to go ahead and just share this right now. You can get these scripts in my ThinkScript class. We just did one yesterday on trying to determine if volume's accumulating or not as well. I'll just share it right now with you guys. Uh, just a quick note that the ThinkScripts aren't guaranteed for timeliness or accuracy, but as long as the data is coming in to the platform is good, then what you'll get is, well, it should work appropriately based upon the mathematics behind the code, but that is a MACD crossover. You are welcome, sir. I didn't even see it there, so I'm glad you caught it. A quick note, if you do want to, I encourage you all to follow us too on Trader Talks. If you're interested in doing so, that's our live session going on right now. A quick note too, if you did want to take a look at that swing trade class where we do go into those targets with price targets, a lot of bull flags in there that we look at. We picked up on WIN, CCL. Those are actually moving outside the range. We looked at some others as well in there, but this is that class. Cam taught a class over here, did a great job with it, filled in for me a couple weeks ago. I appreciate that, Cam, as always. But we go through and we take a look at these when we do. And as we go through them each week, I'll just plug this in if you want to take a look at that playlist for swing trading. If that sort of a time frame resonates with you and you like those price patterns and projections, there you have it. Okay, let's continue on now. So we did that. What others were in there? We had some, Tesla. Tesla was one, by the way. Caesars too. Caesars is kind of, oh, that's not Caesars. CZR. There we go. Yeah, Caesars. Okay, not a bull flag at all. In fact, the difference with this versus Carnival Cruise or Win is that it did make a new low right there, right? It's almost like I won't say exactly a lower high, but that is clearly a lower low. And it's not to say that it can't recover. I don't know what's going on with Caesars, but it's not performing relative to, let's say, a Win. Not even close, right? Not even close. You're seeing some pretty defined flag patterns over here with really defined upward trends. Now for Tesla here, it is discretionary, right? Buying cars. See, this is interesting. I wanted to look at this because I sent a tweet out on this recently, and I want to show you guys something fascinating here. This is a triangle pattern that we had on X, and a lot of times what you'll see on, it's another form of a price pattern. I'm going to just draw this guy over just a little bit more, about right there. And look at this. If I right click here and activate, and I'll zoom in on this too. You see that right there? That is the apex of the triangle. And oftentimes what you'll see is that move start to either hold at that apex or near that apex or break above, break below or break above. But that's exactly how that triangle pattern oftentimes will work out. A triangle pattern marked by lower highs and higher lows. It just keeps wedging together until finally, bam, it breaks out of that coiling kind of consolidation range. And that's interesting. And now here's the thing. People say, because I do look at a lot of patterns, they'll say, Mike, well, what are you seeing? I mean, even if it's, showing some strength right here, what do you think? It might go. And I just say, well, a lot of traders will do this. A lot of traders will also incorporate the direction of the trend here as well. Which direction is the trend right now? Well, I'd say the short and intermediate term trend, that's our bottom. Higher low, higher, and higher lows, higher highs. And here's your consolidation. You're actually getting higher lows over here and on a short-term basis. So that's kind of intermediate term, but short-term, we just made a new high right there. That, folks, is a higher high. And that right there is a higher low if, this is an if, it's got to break above that high. We can only call it a higher low until you get into a high range, right? But again, it comes back to the size of that candle. If we really look at that, I'm not seeing a candle that big through this entire consolidation, except over here at the beginning of the correction. But this actually looks quite flag-ish at the end of that move. It's an expensive stock, but you know what? Let's do this. And it hasn't, it's broken above that upper channel for sure, and it retested as support. So you broke it and you cleared the prior high. And then you came back down here and you held that support 2 times. I mean, right there hit the apex of the triangle and you got it going here. Don't know how you guys feel about Tesla. It's an expensive stock, but it's always interesting too to put, I just want to put a paper trade, an example trade on here on a triangle type pattern. And let me give you where that projection would be. It's always going to be the largest range within that triangle. So if you take this high and this low, I'll just eyeball it. This high and this low, that's our range here. If I take that from the apex of the triangle, we're going to begin to break out here, right off that low. We do follow through. Does that look about right? It looks similar, right? I'll just say something like 410. We'll be a little bit more conservative. You'd have to measure it out. I'm just eyeballing it. But 410 to the upside, or to the downside, somebody might say, put a stop, potential exit level, right? At about 320. We're at 338, so you can see reward up here appears to be a little bit higher, right, clearly, than the potential risk. That was a 20 down there, not a 26. Okay, so we'll do that, 320 to 410. It is more expensive. I'm going to do, look at this. We'll just make it nice and easy here on Tesla. I'm just going to right click. I mean, in terms of the size, the amount we're putting in here, we'll just do like 25 shares or, just to make it maybe a little bit more relevant. I'm going to go ahead and click on that. Oh, did it not go? I've got to make sure that that one adjusted too for me when I did it, the previous one. Always check and make sure that obviously your exits are the same level, the same, I should say, quantity of shares is your entry here. Okay, that's a big one. I'm just going to go day order here. That's fine. We'll just go to a market just to get it under our belt before the market closes today. Good till cancel again. Let's go ahead and put this, the upper range at 410, the lower range at 320. Tab through it. Pretty good there. Any questions on that? Pretty straightforward. You can see, even with just those 25 shares, it's not cheap. No, really, because we're getting up into the 300 plus range. So even 25 shares will show up in terms of the margin requirement, right? The buying power effect, as it states specifically. I'll just state it that way. The buying power effect. But there you go. We'll send that through, and there you have it. Okay. Now, I wanted to look over here as well and kind of highlight that it has been a little bit interesting to see, some of the gold stocks kind of moving outside of a range too. They're not up nearly as much. I mean, percentage-wise, it's still up $1 on AEM, but gold and some of the other commodities are higher. See that this too is also does have some flag patterns associated with it as well. You got a flag. Will it continue to break up and kind of make this trajectory higher? That's a good question. Some people, instead of choosing individual stocks, might try to find an ETF in this group. And there is an ETF out there. We don't discuss ETFs in this group, but I just wanted to highlight that for you guys. Okay. Did I do 4? You know what I did, Scott? I think I put it in between. Thanks for catching that. But I think I put it just a little bit lower than that 420. But maybe you had the full projection that matched the potential target range of that level. Anyways, yeah. If you did, by the way, if you ever wanted to move it, folks, just grab this, pull it up right on the chart. Such a nice tool. If you hit escape right now, it just puts it back to where it was, or you can draw it off the screen and it will drop back down. Okay, I tried to go as fast as possible. Is that a good thing? I got more information in, folks, but we've got a shorter class. In fact, we're out of time right now. But it was good being with you all today. Hope you have a fantastic weekend. It should be interesting. There are a number of interesting kind of price patterns setting up. Again, if you want to check that out, have that class on Tuesday. We'll definitely be rocking it this upcoming week, looking at some of this for you as well in terms of swing trading. That is, if you're interested, because there are a few of those out there right now, it would be Tuesday at, 1 my time, and many of you go, but otherwise it would be 3 Pacific. 3 p.m. Pacific. All right. By the way, there was a question just right here. It said, oh yeah, it'll be interesting too, Jay Richardson, because those rate cuts can influence seasonality. Whenever you get a rate cut during seasonality, it can change things. Just like we saw this year where tariffs were impacted in March, which tends to be a one of the strongest months of the year. Historically, it's been the strongest month of the year through a number of decades, but that's changed. Changed this year for sure with the tariffs. So those things can have an impact there. Yeah. All right, everybody. Well, thank you so much, Cam, for your help as always. And you guys have a fantastic weekend. Look forward to seeing you next week. Take care, all. Bye bye.